Business confidence declines. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. So, business confidence has declined. This is from the NAB Business Confidence survey. Now, before we have a look at this article, let's just jump to trading economics and have a look at the historical data here for the business confidence. We can see here over the range that we have, 2008 GFC, it plummeted. And the long run average, the average is, what are they saying here? 6 points above. And we've now dropped down to 0. So keep this in perspective when we go through their media release, that it's continuing to, well, fall. It's trending down, we can see here. But look at that sharp decline, how fast that dropped. Here we go, just over 2,000. Look at that drop as well. So guys, this is something to keep in mind, particularly with all the other stuff we are hearing in the news. I discussed earlier today about, the retail recession, how many people are employed in that sector. And you've got people are talking up the housing boom, that's driving up, or housing prices are going up as well. But then this business confidence is painting a different picture. We need to look at everything holistically to kind of evaluate what's being fed to us. So if you think these type of videos are important, if you think people need to be made aware about all of these implications, please share this channel, share the content around. This is the type of stuff I want to be discussed at barbecues after, the footy results. Anyway, guys, let's jump through and read the NAB monthly business survey results for September 2019. And we have, it was released on the 8th of October. It was embargoed until the 8th of October. So key messages from the survey. Business conditions recorded a 6th consecutive below average month, pointing to ongoing weakness in the business sector. In the month, conditions edged up 1 point, so conditions, one part of their survey. Confidence edged lower, while both conditions and confidence remain below average levels of 6+ index points. The broad-based trend decline since mid-2018 appears to have slowed. So once again, we're hearing the same thing, that the decline has slowed. In the next month, profitability and trading conditions remained below average, contrasting with the employment index, which edged up and is now above average. This mirrors official data that shows ongoing strong employment growth, but subdued consumer spending. Is employment growth strong? Last time we looked at unemployment rates, it had tacked up. At present, retail and wholesale, the goods distribution industries, are weakest, a reflection of conditions in the household sector. Yes, and, 10% of our workforce, as I'm reiterating. Manufacturing and construction are also weak, reflecting the dynamics in the housing sector, and possibly some impact from global trade turmoil. Forward indicators remain mixed, but overall suggest that conditions are likely to continue a below average trend. Likewise, price indicators suggest inflationary pressure is likely to remain weak. Recent rate cuts, as well as the tax refunds, appear to have driven some improvement in the retail sector, but with conditions remaining deeply negative, it is unlikely to have been enough support to see a material turnaround in the sector. This is the thing. I feel like they're all just playing catch up because they're using outdated data to manipulate the economy. And by the time they start cutting tax rates or they start cutting interest rates, we've gone too far. I mean, overall, our economy is very primitive. We're just going to be importing more crap and buying more stuff we don't need. Think about all the investment that's happened in Australia. Where's most of it gone? A lot of it's gone into housing. And what's happening to that housing? Well, just look at any of the Mascot or Opal Tower videos I've done. Highlights. So, how confident are business? Confidence edged 1 point lower in September and now lies at 0 index points, compared with its long-run average of +6. So how did business conditions fare? Business conditions ticked up 1 point in the month to +2 on the index, recording its 6th consecutive below-average read. So what components contribute to the result? Trading, profitability, and employment all edged up 1 point in the month, with only the latter to record an above average result. So we seem to be trending below average on everything here with, just employment. What is the survey signaling for job growth? Based on historic relationship, the survey suggests that employment will rise around 18,000 per month over the next 6 months, short of the outcomes seen over the past few months. So they're saying employment will still go up, but it'll be below average. Which industries are driving conditions? Manufacturing and transport and utilities saw sharp increases in the month, while mining, a relatively small survey weight, saw a large fall. In trend terms, retail and wholesale remain weakest, while construction and manufacturing are also negative. The services sector and mining currently see the best conditions. Which industries are most confident? Confidence fell in all industries except retail and construction, which rose, and recreational and personal services, which was flat. Why the hell are retail and construction rising? I guess maybe it's an uptick. It's gone so bad, people are turning around. People are leaving in the comments that things are getting better for them. So maybe there's, well, of course, we've got the uptick in housing, more demand for purchasing. So maybe more people are having, jumping into the market, and there's a slight uptick in those conditions. It doesn't take much if you've been in tough times for a while. It doesn't take much to see a slight turnaround and a boost in your confidence in your business. If you've been, if you've had nothing on the books planned up for the next few months, or stuff starting to trickle on, that could be the point of difference psychologically. So manufacturing, construction, recreation, and personal services are weakest. Where are we seeing the best conditions by state? Conditions rose in New South Wales, Victoria, and SA in the month, while WA saw a sharp fall. In trend terms, conditions remain most favourable in WA and New South Wales, which are above the national average. The other mainland states are clustered at -1 to 1 index points, while Tasmania remains the weakest. That's surprising about WA. It's surprising about WA. What is confidence like across the states? Confidence fell in Victoria and Queensland and Tasmania in the month. In trend terms, confidence is compressed at 0 to +3 index points, with the exception of WA, which is a little stronger. Well, guys from WA, let me know what you think. Do you agree? How are you feeling in your businesses? So are leading indicators suggesting further improvement? Forward orders edged up in the month, but remains negative and below average. Capacity utilization declines slightly, but remains above average. These indicators, in combination with business confidence, point to a continued below average of business conditions. What does the survey suggest about inflation and wages? Final product prices growth, including retail, edged lower in the month and suggest overall weak rates of inflation. On the input side, purchase costs growth ticked up, while growth in labor costs edged lower. Notably, the cost continuing to grow faster than output prices. So let's have a look here. Business confidence, 0. Business conditions, 2, from 1 to 2. Trading, from 3 to 4. Profitability, -3 to -2. Employment, 2 to 3. Forward orders, -4 to -2. Stock, 2 to 2. Exports, 0, 0, 0. You can see here conditions remain below average. So business confidence and business conditions are still below the average point. Let's have a look here. Retail conditions and confidence. Confidence is up there. Official retail sales data shows an increase of 4% month on month in August, following flat outcomes in July. While the outcome was a slight improvement from previous months, taken together with outcomes for July, it suggests that household consumption growth has remained weak in quarter 3. With household consumption accounting for around 60% of the economy. Okay. I'm going to have a shot of my coffee and we just dwell on that, guys. This is why our treasurer is hoping more people buying into housing, then a slight uptick in the housing sector will increase the wealth effect, then more people will consume, and that will flow onto the economy. But how much of that consumption is debt-based? So there is the risk we continue to see weak growth overall, especially when combined with ongoing decline in dwelling investment. Oh yeah. From the business perspective, the NAB monthly business survey suggests there was little improvement in the sector in September, with conditions improving but remaining very low in trend terms. In trend terms, both trading and profitability in retail improved in the month but remain relatively low. Employment was unchanged but is around its lowest level since the GFC. The weakness is broad-based across industries. Household goods is weakest and continues to weaken. Conditions in car sales, retailing have improved this year but also remain low. Conditions in food retailing are slightly better and have improved recently but remain at their lowest level for some time. Retail business confidence has improved in 2019 and is a little elevated when compared with other industries. This suggests that while conditions are very weak, businesses remain optimistic. Consumer and spending growth in the economy remains a focus, especially against the backdrops of the recent tax cuts and their anticipated impact on consumer spending. NAB Economics' view is that consumer weakness is likely to persist for some time, with the dynamics of weak income growth, high debt levels, and stretched budgets. So we can see here, business confidence. I mean, yeah, guys. What do you reckon? Business conditions and confidence. Tasmania, boo. Victoria, Queensland, South Australia, WA. I'm surprised with WA. I'm definitely surprised. We can see here, cash flow, capital utilization, and I will link to this, guys, so you can go through it in greater detail if you like. But let me know what you think, where it's all heading. Particularly the dependency on the retail sector, which many people are saying, you know, brick and mortar stores are no longer relevant. But see, this is the problem, guys. They definitely are relevant because of how many people they employ. That's the problem. I mean, we may rarely go to them. Everyone's shopping online, but there's still a whole lot of people that depend on that to get their money to do their online shopping. So let me know what you think. Has your business confidence improved? Are things looking up? Are things looking down? Or are you pretty neutral? Please like, share, and subscribe the video. If you'd like to help me produce more content, I have a Patreon and Subscribestar, and every little bit helps. Thank you very much. Well, guys, I will talk to you all next time. Take care.